Thomas Nolan, President and Chief Operating Officer of General Growth Properties, joins us now to discuss the company's plans and the future. Thomas, thanks for stopping by. Let me ask you first of all about your plans to emerge from bankruptcy. There's been a lot of talk about companies interested in buying you. Simon Property obviously is one of them. Have you been in talks with acquirers, possible acquirers?
Sure. Thank you for having me. Just in terms of putting, I guess, that in perspective, what happened this week was that the bankruptcy court approved plans of reorganization for a number of our properties, over 100 of our properties, over $10 billion of our secured debt. It was a terrific outcome for the company. It was a consensual deal with the creditors, so we think that was terrific. When we filed bankruptcy, we talked about three things. We wanted to run the malls, business as usual. We think we've done that. We wanted to extend out our maturity ladder. What we did this week did a lot of that. And then finally, we needed to deleverage the company. We have over almost $28 billion in total debt. So having now got the balance sheet straightened out and we're much more transparent, we got an additional 5 years of duration on this debt. It's not due for 6.5 years on average. It's 5.5% interest rate. We now think we're much more transparent, and companies can look at us and institutions can look at us. So we're going to run a process. We got this done this week. It was a big step in the overall emergence of the company. And right after the first of the year, we're going to run a process. And we're going to be looking at institutional fundraising, and we'll be looking at strategic interest from anyone who comes forward. We've certainly heard about those companies. They've made inquiries. But we like the fact that what we accomplished this week allows us, if we choose, to end up to be a standalone company, because we've got options.
But it allows you also to be more attractive to bidders who want to come in and do due diligence. Is that the kind of process you're talking about?
I would think so. I mean, we're certainly, again, we're in bankruptcy, and bankruptcy is inherently transparent. We're going to run a process, and when you're trying to maximize stakeholder value, which is what our intent is here, the more options you can have, the better. So if we can do it institutionally and raise money traditionally, we'll do it. If it ends up to be one of these strategic investors that comes forward, this board and this management is going to make sure we do the best thing to maximize stakeholder value.
Have you had contact, though, with any of these strategic investors? I mean, have they come in, for example, to buy debt, Simon Properties, Brookfield Asset Management, others that you can talk to us about?
Well, we understand that some of them have bought debt. We don't have confirmation of how much they own, but we certainly understand that that's occurred. We also understand that they've both privately and publicly, I think, acknowledged interest in our portfolio, which, we're not surprised. We're flattered by the interest. We have great properties.
You talk about emerging as a standalone company here. Is there a possibility that you sell off large assets rather than selling off the entire company, and in that sense you can afford to be a standalone company after?
Well, I think part of being a standalone company is to make sure that you have enough critical mass. We're the second largest owner today behind Simon. We've been around for 50 years, so we have the critical mass. It's possible, I guess, we could certainly sell an asset or two, but one of the beauties of the plan that we'll likely come forward with is that we don't believe we'll need necessarily to sell individual assets. We think we'll be able to raise capital at the corporate level. Again, all of those are going to be in comparison to whatever these strategic opportunities are that are presented to the company.
Let me ask you, you're in a unique position, Chief Operating Officer, the second biggest mall owner in the U.S. What is your take on the consumer right now?
Well, I think we went into this holiday season with pretty muted expectations. We have a long history, again, in this portfolio. There's a pretty direct correlation between employment and spending. So we certainly went into it with muted expectations. I would say we're reasonably pleased. We're getting pretty much what we expected. What we are pleased with is a couple of things. I think the traffic has been terrific. We're seeing a lot of people come into the malls. They're more value-oriented. They may be spending a little less, but they're coming in, and that certainly makes us feel good about our destinations. We continue to believe that we make these destinations dynamic. They continue to evolve, that when the market improves, we're going to be the retail outlet of choice. So we're pleased about that, and our retailers tell us they're pleased. I mean, they were so much better prepared for this holiday season than they were last year. So they may sell a little less, but I wouldn't be surprised if they make a little more.
All right, Thomas, I appreciate you coming in. Thomas Nolan, Chief Operating Officer of General Growth Properties.